So today we're going to take a look at my M1 Finance portfolio, check out some of the dividends that got paid out recently, and how the portfolio is performing overall. So we're going to hop over here on the computer on the desktop, and we're going to kind of look over some of this information. You can see right over here, I actually have my portfolio at $69,732, which was actually the peak back in January as far as total value. So hopefully with the market slowly recovering, we'll see some really nice gains over the next couple months. If it goes up, if not, no worries. We are in this for the long term, so we're going to keep on investing. So let's go ahead and kind of take a look around and see how the portfolio has been doing since it's been a little bit of time, but just kind of seeing some of the different things. So the last day, we're down about $856, which is getting kind of crazy thinking that, the portfolio is down 1.21%, and that's over, $850. Obviously, as the total value of the portfolio keeps going up, 1% will just get bigger and bigger as far as a total dollar amount. So if we hop over here to the week, it's been a good week. We're up about $2,400. You can see right over there. If we go to the month, we're up almost $5,800 now, and you can see here we actually earned about almost $95.28. Well, actually, we earned exactly $95.28 in dividends. And if we hop over here to the quarter, we're still down on the quarter about $5,000, but we earned over $185 in that time period. And if we go to the year, we're still up about $5,000 over the year, and then almost $595 in the last year that we got earned out in dividends. And then lastly here, you can see our overall gains is about $9,200. Some of that has been realized, including the dividends, which we're getting closer and closer to having earned over $1,000 in dividends. Now, this is obviously money that's either been paid out or we've passed the point where we're going to be earning it regardless if we sold a stock. So that's all accumulated onto this right over here. So just, from when we started this portfolio, which was all the way back on January 23rd, 2019, to have over $1,000, very close to it, obviously. Now, depending on how you want to kind of go about it, with almost $70,000 in your portfolio, if you had 4%, you would be getting a 4% yield. You would be getting a pretty hefty amount. Like, let's see here. So 0.04. So that'd be $2,800 a year estimated. You would be getting if you take that $70,000 and invest it into the to this portfolio, which would be pretty cool. But we are looking at investing a little bit for dividends now, but also for dividends in the future, because we are really caring about that dividend growth over time, not necessarily the yield as of today, because I don't actually want the dividends today. I want them in about like 10 years or so. So that's always something to kind of consider as well too. This is my portfolio down here. And then if we kind of take a look at our activities here, let's go ahead and take a look at our dividends here first, and then we'll kind of go back and look at some of the other stuff. So this is kind of what's been being paid out so far in March and then all of February. So we're still expecting a couple more payouts in March. So you can see here we have like NextEra Energy just paid us $20.02. Microsoft, which was actually the first dividend that paid out in this portfolio, paid out $14.64, which is really cool. If I actually switch over the dates here, the very first payout was March 14th, 2019. So almost, 3 years ago? And that was for 2 cents. So for anybody that's getting started, I always like to show this kind of stuff because it's really important to understand that when you get started with investing, just getting started is a big deal, and then staying consistent is what's going to help you achieve bigger goals, because you got to stay consistent with investing. Now, if you're somebody like myself who just wanted to get started with something easy, I personally love using M1 Finance, which is this platform I use here. I will always have a link for them in the show notes down below for you, so you can get started with them. You get a nice little bonus, and it helps support out the channel as you get more free content like this. But check that out afterwards to be able to get started with that. So let's go back here and go to the dividends again to kind of keep taking a look here. So we got like Discover here, paid a nice $6.72, Visa $3.58. We have Costco, one of my favorite stocks that I've held for a long time, $5.82. Ally right over here, $8.77. Apple paid out over $10, and then Texas Instrument was $9.06. So that's kind of been everything as far as dividends paid out so far since my last update. So if I actually go over here into my dividend tracker, this is actually just right over here, something I put together. So right over here, let me see if I could zoom in a little bit. If I remember how to functionally use the computer. Okay, there we go. So making sure it's on screen there for you. So you can see here, so for February of 2020, we earned $33.89. It was only just a tad bit more than what we earned in February of 2021. Part of that was actually because we've condensed the amount of stocks that we have in the portfolio, so some of the companies aren't paying out on those same time periods anymore. So obviously, it's kind of unfortunate that it's only just slightly over it, but nonetheless, I mean, if you look at what January did versus 2021, that was a huge increase right there, so that's already okay. And then so far for March of 2022, we're at 44.96. Last year we're at 63.93. So again, we still have a few more payouts to go for this month, so once those come in, I believe we should actually get over that $63 pretty comfortably, which will be nice because that's the goal, is constantly building up. I mean, you can see here a couple of years ago that 2 cents from Microsoft back in 2019. So, every single year you're seeing these nice increases. Obviously, maybe not as much in some perspectives, but hopefully, over time, 2023 can see even bigger and better growth. So far for 2022, even though we're not even done with the quarter yet, we actually are already surpassed what we made in 2021. So you can see that 122.01 from last year and then 131.08 so far from this year, not including what we're expected to get for the remainder of this month. So hey, good increases. As long as we keep moving forward, I think that's always the most important part. Let me zoom back out here. So these numbers kind of fluctuate here. So you can see our average right now is $43.69 a month. So we're obviously wanting to get that to 100. That's the first goal, and then $1,000 a month. This is a little different from what we saw on the actual portfolio here, which was the 913. That's because this doesn't account for things that are in the process of being paid out and not officially paid out just yet onto the portfolio, where this total right here is actually already considered, even if it hasn't been paid out just yet. So I also utilize the Dividend tracker, which is actually made by my friend JJ Buckner. He also loves dividends and kind of going over all this stuff as well too. So you can see this is a little past updated because I just got to kind of go through this process. But you can see my dividend yield is 1.57. So I know for a lot of dividend investors, they're trying to get to that 3.5 to 4%. But because I don't want this money for another couple of years, I don't want to be worried about paying taxes on this stuff. So I'm gonna keep focusing on the dividends that are paying out at a decent amount now, but then also going to have really nice growth over time. Now, one other thing I want to mention as well too is that there's this thing called the yield on cost. So this right over here, based off of those increases that happen over time, I'm actually getting closer to 1.78% right there. And you can see in March, I'm expected to make about $120. I don't know how accurate that is or not. Let me see. Because yeah, we still got quite a few payouts to go for the remainder of this month, but we'll see if that's going to be accurate by the end of this month, as we'll do an update for that. So real quick, before we continue on, if you are getting some value out of this video, make sure to hit that like button down below, as well as that subscribe button. And then our overall annual income, we are looking at $726.98. So getting closer and closer to $1,000 every single year as we keep investing and building up our portfolio. So of course here it shows us all of this. What I really like about the dividend tracker as well too is that you can actually see based off of you can see it right there on screen. So like with Apple, we have 47.53 shares at 22 cents a share. That's $10.46 that we're expecting to get paid out. Obviously, as we buy more shares, that number will go up, or if they do dividend increases, which is my favorite thing ever, they will also have this changed and moved up as well. So yeah, I believe Home Depot is still one that we need to get paid out from. Ross is another one, and then I think Lockheed Martin still needs to pay. So you can see there are still quite a few payouts that we are expecting that are pretty large sums over there, so that way we can add to our little dividend income here and then see how much we have in comparison to the last year. So that's something I like to do just because it helps me out, gets me excited to keep on investing, because I think that's, like I said earlier, one of the hardest things when it comes to investing is being consistent, and that's a very, very difficult part to do. So let's go ahead and take a look at some of the last couple purchases that we did in this portfolio. But before I do that, I do want to mention really quick, if you have student loans, I would highly recommend checking out Earnest. They actually do help people refinance their student loans entirely for free, which is a really cool thing. And the nice thing on top of that is that it doesn't cost you anything to actually refinance your student loans. So there's no like fees or anything else that goes along with it. You can actually save quite a bit of money if you can lower that percentage and use that money to invest in other things if you wanted to, like the stock market. And here's the coolest thing, if you use that link down below, not only you're supporting this channel, but you are also gonna get a nice little bonus for going through there and refinancing those student loans. So again, check that out in the show notes down below. So let's go ahead and take a look here and see what our last purchase was. So I had right over here, $50 get put into the account. So I bought a little bit of Home Depot. That was from a referral bonus. So thank you to anybody that utilizes that. I had that dividend payout from Next Era Energy. So I purchased a little bit of Apple there. So what was happening was I did manual buys with this just because I wanted to have that money go into particular stocks. I had that Microsoft dividend come in, and so I put it into the Ross stock because Ross was dropping pretty dramatically in my portfolio. And then the big one right over here, which was March 8th, I put $1,000 in. And then you could see this is what I ended up doing. I did Facebook, Block, which is Square, Home Depot, Google, Tesla, Airbnb, Apple, and then Microsoft all with $100, and then Ross I did $200. Again, that price was so dramatically dropped over the last couple of weeks, so I decided to keep buying in dollar cost average. So you could see I bought with $200 at $85.05 a share. I got 2.35 shares of Ross, which is really nice because their dividend yield is not that great anyways, but I think with this price point, it's a good price point for me to get in. Because if I go into, actually, let's go to my holdings. I have about 50 shares of Ross with the average price of 108.41. So buying it at $85 has definitely started bringing down my average cost, because I think I was at like 112 or 115 before I bought it in a couple more times. So I'm still down right now, which is fine. I'm in it for the long term when it comes to these companies that I have in my portfolio. Granted, some of them might change here and there, but the way I look at it is definitely long term. So for me, that's definitely a current purchase. I also mentioned that I bought more into Square. So Square, I'm also down quite a bit. That one was the biggest hit when everything went down. And then I also did have a few shares of Facebook. And when that dropped, that was pretty significant as well. So those three definitely, brought down the portfolio quite a bit during the downturns. And, if the downturn continues, it'll probably take another big hit. But I'm making sure that I'm dollar cost averaging with the companies that I'm planning on keeping. Sometimes, obviously plans change as well too. But like if we go into Square, so my average price is $196 and it's currently going for $135. I did buy some, I think with that $100, I bought almost pretty much a whole full share because it was closer to like $99 a couple weeks ago. So I did that one. And then if I actually switch about it here, let's go to Facebook. So just as an example, so Facebook, my average price is $272 and it's currently at $213, but it went down to like $190 or $185. So it definitely took a huge hit onto the portfolio, but I still plan on buying more into Facebook. And even though Facebook and all the other companies in my growth stocks pie right over here are all companies that don't actually pay out dividends, I actually am still paying attention to these companies as a potential in the future to one day do that. Tesla probably not any time closer to doing that than like somebody like Facebook. Facebook might have the opportunity to pay out dividends in the much near future than that. But what I wanted to do is actually show you. Let me actually hop over to another screen. All right, so I went over to seekingalpha.com and I'm gonna go into my portfolio here. So I went to Facebook and they have this section pretty much on all the stocks here that says dividends, and when a company doesn't pay out dividends, it does clarify that for you. But what they do is a hypothetical projection based off of earnings per share. So this is saying if they did pay for it, if they did pay, their current earnings per share is $12.42. So if they paid out 10%, their annual dividend would be $1.24, which would be a yield of 0.58. So not really that enticing, but there are companies like Apple, Microsoft, Ross as well, Costco, have fairly low yields, and yet people are still buying them. Those dividends are just a nice little bonus. Now, a good rule of thumb for a lot of companies is staying under 60%, which is kind of why this payout goes only up to 60%. But if they did decide to go with a 60%, which would probably not be likely, especially at the beginning, their annual dividend would be $7.45 per share that you have, which would be a yield of 3.49% as of the actual cost of the stock price as of right now. So obviously, if the stock continued to go down or went up, that yield would actually change pretty dramatically over time. So when you consider that, if they ended up doing the 60%, again, not as likely. The annual dividend was $7.45. Currently, with Facebook as an example, I have 10.5 shares of the company. So if you 10.5 times, we said 724, that'd be $76.02 paying out quarterly, which is the case with most companies. That would be $19 and maybe a penny every single quarter from Facebook. Now, that would be cool if they ended up doing that, but that's always not the case. So, maybe it happens, maybe it doesn't. If it does, that's going to help obviously in the long term. If, by the time I want to start using this money as dividend income and they're still not paying out, but their growth has definitely, come back for me and is in the positive, I can always sell that stock and then use the proceeds to buy companies that are paying about 3 to 4% dividends, like real estate income, or realty income, I should say, that pays closer to 3.5%, 4%, and then kind of just go that way to start earning those dividends. So there's different options. Ideally, I think it'd be cool if the companies that I have in this portfolio that are not paying dividends to one day actually pay dividends would be a really, really cool thing. So if I actually go to Google as well, so go to their dividends, you can see here earnings per share is $116.05. So if they paid out just 10%, they'd have an annual dividend of $11.60, which would be 0.24 yield. If they did the 60%, again, very unlikely to get started with that, they'd pay out $69.63 per share annually, and that would give you 2.5% yield. So, can you just imagine, if you had quite a few shares? Obviously, with Google, I don't have a lot because it is so expensive as of right now because they are splitting the stock. But you can see here I have 1.74927 shares. And I can't remember, are they splitting it by 20? But so that'll go up, but then obviously how much they pay in dividends would go, matching that as well. But still excited to one day possibly get those dividends if they do end up paying out with that as well. Because Apple did that a long time ago. I like to mention that because a long time ago, Apple wasn't paying out dividends. And then once they did, the people that were buying back then not only had all that amazing growth over time, but they also got all of the new dividends that started paying out. So let's go see dividend history. Let's go. Yeah, so they started paying out dividends August 8th of 2012. So before that, they were not paying out dividends for a long time. I think they were way back there, and then they stopped, and then they started up again as well. So that's a possibility. So again, something to just think about, that maybe these companies aren't doing it yet, but in the future they might. So not only going to get this amazing growth, but then eventually you're going to get this really nice quarterly payout from these companies just for having owned the stock, and you'd get them at a much better price point than they would probably be in like 10 years if they started paying out those dividends. So just something to kind of consider on that front as well, because it's really cool to learn more and grow more when it comes to your dividends. But what I want to do is always mention that watching videos and learning more about investing is always the best way to go. So I'm going to keep my next video right over here for you to keep on learning and growing. My name is Dennis, and I'll see you in that next video.